Hello everyone, welcome back to Fundrise Finance. ETFs are a wonderful investment vehicle for anyone to invest into the stock market. They provide a way for an investor to invest into multiple companies at once, giving wonderful diversification. Dividend ETFs among these are very popular, and when chosen correctly, they offer a good price appreciation and also good dividends on the side. Few of the popular dividend ETFs out there are SCHD, VYM, VIG, DJRO, and SPYD. I made a detailed video regarding these ETFs in a previous video, which you can access by clicking on this link. With all of these ETFs announcing their quarterly dividends and in fact paying them out this week, I wanted to see how they're holding up year over year and comparing them with their recent averages to see if they're on the right track or not. Let's check it out. Like always, if you're new here, consider subscribing and hitting that bell so that you don't miss a single video packed with valuable information just like this one and help grow this young channel. To start with, SEHD, which is a very popular dividend ETF because of its past performance and also the filters that it uses to select the stocks. It gives a yield of 2.59% with a 5-year growth rate of almost 12%. SEHD paid out its most recent dividend on March 28. The dividend was for almost 52 cents. And when we compare this with the Q1 of 2021, where it paid out just over 50 cents. When we do the calculation, we see an increase of just 2.98%, which is well short of the 5-year growth rate of almost 12%. To be precise, the difference is 9%, which is high. But we can see here, even in 2021, the first quarter dividend payout was less compared to the remaining quarters. So the dividends for the remaining quarters were increasing slightly higher and higher. So hope SHD does the same this year also and maintains that growth rate. At the end of the day, the growth rate has to be more than the inflation. Otherwise, the dividends will start to lose their value. Next, let us look at VYM, the Vanguard High Dividend Yield ETF. Though it is named a high dividend, the actual dividend provided by this ETF is not that much. It's just 2.32%. The 5-year growth rate is 7.05%. Coming to the dividend payout, VYM paid out 0.6622 cents on March 24th. And if you look at the same quarter of last year, you can see that it paid out 0.6564. When we do the calculation, we see that this year's dividend was just 0.88% more than last year, which is very less. It's almost 6.2% less than the 5-year growth rate. Hope VYM makes it up in the remaining quarters of the year. Next, let us take a look at VIG, again from Vanguard. This is the Vanguard Dividend Appreciation ETF. This ETF also has a low yield of just 1.68%, growing at a rate of 9.06% for the last 5 years. VIG paid out 0.6939 cents on March 24th. When you look at Q1 of last year, it paid out 0.5131. And when we do the calculation, we see that VIG paid out more than 35% than what it did for same quarter last year, which is amazing. Compare that to the 5-year growth rate of 9.06%, we see that VIG has outdone it by almost 26%. So investors into this ETF would really hope this payouts keep increasing for the remaining quarters also. Next, we have DGRO, which is the iShares Core Dividend Growth ETF. DGRO has a yield of 1.92% that grows at 10.2%. DGRO paid out 0.262 cents on March 30th, and for same quarter last year, it paid out 0.2622 cents. So in fact, it is lesser than what it did the same quarter last year. And when we do the maths, we see that same. It is less by 0.08%. And when we do the maths against the 5-year growth rate, we see it falling short by minus 10.28%. This actually came as a little shocker to me because DGRO is a well-known ETF that keeps growing its dividends. So I hope it makes it up in the remaining quarters of the year. Next, we have SPYD, the Spider Portfolio S&P 500 High Dividend ETF. SPYD has a very high yield of 5.87% currently, though the growth rate is not good. It's just 0.15%. When you look at the dividend payout, SPYD paid out 0.6527 cents on March 23rd, and for the same quarter last year, we see it paid out 0.6362 cents per share. And when you do the math, we see that SPYD paid 2.59% more this quarter when compared to the same quarter last year. So it outdid its 5-year growth rate by almost 2.45%. I hope this ETF grows its dividends more than what it is doing currently, and that will result in the growth rate becoming much higher. Next, we have HDV, which is the iShares Core High Dividend ETF. HDB has a yield of 2.86%, that is growing at a rate of 4.34%. The dividend payout for this quarter was 0.7698 cents per share. And when you look at the payout for the same quarter last year, it was 0.8821 cents per share. So it paid less this quarter when compared to the same quarter last year. And when we do the maths, that comes down to almost to minus 12.73% less than last year. And when you compare it to the 5-year growth rate, it falls short by almost 17%. So HDB and SPYD are more geared towards income seeking investors who are closer to their retirement and are looking for more current income. So it's purely the investor's choice to seek out these ETFs. The last ETF that I wanted to check out was LEAD, which is the Realty Shares DivCon Leaders Dividend ETF. In fact, I don't know why Seeking Alpha still calls this ETF as Realty Shares ETF. It was actually bought by the Siren ETFs back in 2020. I made a detailed video regarding this ETF recently, which I highly recommend you go and check. I found this ETF's construction logic to be pretty solid. I'll provide a link to that video over here, which I would request you to check after watching this whole video. For the most latest quarter, this lead ETF paid out 0.1111 cents per share. And when you look at Q1 of 2021, we see that it paid out 0.0964 cents at the time. When we do the math, this quarter they paid 15.25% more than what they did at the same time last year. And when we compare it to the 5-year growth rate of 28.72%, it does fall short by almost 13.5%. But I think it will catch up in the remaining quarters of the year. Like I mentioned in the detailed video for this ETF, I have not yet started investing into this ETF, but will be comparing it against all other popular ETFs that I already invest in to see how it is holding up, and that would give me a better picture. So this is the overall picture of all the ETFs that we just discussed. Almost all of them have a lot of work to do in the remaining quarters of the year to keep raising their dividend and thus maintaining that growth rate. We really need that because in the current high inflationary environment, we really want our dividends to increase more than the inflationary rate so that they don't lose their value. I hope you liked this video and found the information valuable. Please subscribe to my channel for more such informative videos in the future. And also, I would really appreciate if you could provide in the comments what you liked about this video and what you would like to see in the future, and I'll try my best to cover them. So until we see in the next video, let's try as much as possible to be financially healthy. See ya. Bye.